Welcome to Global News Headlines Today.
Global Edition, Daily World News Bulletin, Thursday, April 30th, 2026. All updates verified by Grok with real-time X.com references. Silver miners report. Earning in May, huge profit earnings. Update, paper silver just dipped again into the $71 to $74 zone. Everyone is watching the price on the screen and thinking the story is over. But here is what Wall Street still has not priced in. The silver miners who actually dug the metal out of the ground during the first quarter of 2026 sold it at realized prices of $80 to over $120 per ounce in stretches. Those numbers are about to hit the earnings reports in the first week of May, and they are going to be explosive. Welcome to the full deep dive on silver. Why May earnings are set to deliver 100 to 300% profit beats for the best producers, and why you cannot build anything high-tech without this metal, and we are running out fast. Let us start with the money. The earnings calendar is loaded. Pan American Silver reports after market close on May 5th. Consensus sits around $1.06. That is a 152% jump from last year. Revenue expected near $1.25 billion, up over 60%. Their big Juanicipio mine is ramping, and they captured much higher realized prices in the first quarter. Hecla Mining, America's largest primary silver producer, reports right around May 5th or 6th. Consensus around $0.27 to $0.28 per share, with massive operating leverage because their all-in sustaining costs stay very low, sometimes even negative on the silver side. First Majestic Silver drops numbers May 6th, with conference call May 12th. They produced 3.5 million silver ounces in the first quarter. Consensus EPS near $0.29. With realized prices far above older models, margins are set to explode. Other names like SSR Mining, Coeur, and Strong Juniors follow the same pattern. Analysts are still using old $50 to $60 silver assumptions in many models. At $12 to $18 the all-in sustaining costs and 75 plus realized prices, every extra dollar drops straight to the bottom line. We are talking 200 to 400% margin expansion for the low-cost producers. That is, the May surprise nobody is fully modeling yet. Now, zoom out. Why are these prices even possible? Because you literally cannot build the modern world without silver. AI data centers are the new monster. Servers use up to 3 times more silver than traditional racks because of high conductivity needs, thermal management, and power connections. Google's massive Anthropic investment and the entire hyperscaler build-out are sucking this metal in at record pace. One large data center can consume dozens of tons. Solar is still huge. Even with thrifting, photovoltaic demand runs 150 to 200 million ounces per year. Electric vehicles use 25 to 50 grams per car, sometimes double that with charging infrastructure. 5G, quantum computing, defense electronics, SpaceX satellites, every high-end semiconductor needs it. Silver's unique properties, best electrical and thermal conductivity of any metal, plus it does not corrode, make substitution almost impossible at scale. Copper and graphene simply cannot match it in these high-heat, high-reliability applications. On the supply side, the picture is tight and getting tighter. Global mine production is basically flat around 844 million ounces. New projects are 10-plus years away, and grades are collapsing at existing mines. The Silver Institute and Metals Focus Project, the 6th straight annual market deficit in 2026, somewhere between 46 million and 67 million ounces depending on the source. Cumulative drawdown since 2021 is already over 700 million ounces from above-ground stocks. COMEX registered inventories are dangerously low. Coverage ratio sitting in the low teens %. Physical premiums are spiking even when paper price dips. That is the classic sign of the disconnect between paper trading and real metal. Geopolitics adds fuel. Iran tensions, oil spikes, accelerated green energy, and AI push all point to higher industrial demand, not less. Analysts like JP Morgan see $81 average silver for 2026. Others are calling 90 to 130 plus in base cases. Squeeze scenarios go much higher. For miners, this is rocket fuel. Low all-in sustaining cost producers turn into cash flow machines. Stocks have not fully priced the earnings beats coming in May. Historical post-earnings moves on big silver beats show 20 to 50% pops in days for the strong names. This is your window. So what should you do? Stack physical silver while premiums are manageable. Look at quality miners with low costs, strong balance sheets, and real production. This is not just another shortage story. This is a structural supercycle driven by AI, solar, EVs, and defense that the paper market cannot suppress forever. Silver is not just money. It is the metal that powers the future, and the future is running short. Drop your questions in the comments. Which miner are you watching for May earnings? Hit like, share this with your stacker group, and subscribe for the full Locked series on silver, stablecoins, tariffs, and more. Like, share, comment, and subscribe. This has been the Global Edition, today's news. Stay informed. See you tomorrow.